Hey everybody. Now, what are some good rules to stay profitable in the crypto space? When are some good and bad times to buy? When should you consider taking profits? Where should you rotate your profits into? How do you identify which tokens are, say, undervalued, or perhaps in an accumulation zone ready to break out? Welcome back everyone. In this video, we're going to look at how smart money moves in the crypto space and how profits tend to rotate around in search of the next pump. Now, the goal is to ride this crypto money cycle and take high probability trades. If this sounds interesting to you, I'd appreciate a like and a subscribe. Let's dig in. Alright, so the first question I want to address is how do you generally stay profitable in the crypto space? Well, if you're a long-term investor, you want to be cognizant of where we are in the 4-year market cycles. That's dictated by the Bitcoin halvings. So the best time to buy and accumulate are during these long accumulation zones, right? During the multi-year bear markets. And you want to time your exit as close as possible to the market cycle peak. Now, what about the traders? Well, beyond knowing how to read chart patterns and technical indicators such as the volume, the RSI, and the MACD and so forth, you'll also want to understand how the crypto money cycle works. And you'll want to keep tabs on the market cap, both the total crypto market cap, along with the market cap of the individual tokens you're interested in trading. And finally, you want to keep tabs on the Bitcoin dominance too. Okay, so let's talk a bit about the crypto money cycle first. So this diagram is from a blog article which I wrote a little while back, which I'll link down below in the descriptions. So you can think of this macro cycle as a semi-organized way in which smart capital tends to rotate around and slush about in the crypto space. Now, after a bear market or a large crypto market correction, capital re-enters Bitcoin, which serves as an anchor and a confidence index for the crypto space, right? So Bitcoin's the original cryptocurrency, right? It has the largest market cap. It's Nakamoto consensus protocol, boasts proven security and decentralization. It's the blockchain with the largest network effect. It's the cryptocurrency with the highest level of institutional interest and legitimacy, right? So simply put, if Bitcoin's pumping, that's generally good news for the entire crypto space. A good sustained Bitcoin rally followed by a consolidation period is typically necessary for an altcoin season. And if Bitcoin's dumping hard, well, its massive gravitational pull will typically drag everything down along with it. Now, after Bitcoin's had a good run, profits tend to rotate to the altcoins, from the large to the mid to the small caps, as investors elevate their risk profiles to continue chasing returns. Finally, capital then returns back to Bitcoin and stablecoins, and some of this capital may exit back into the fiat system altogether, especially if the market was quite overheated, or perhaps we're entering a prolonged bear market. Now, in addition to this macro loop that goes around like this, within the large caps themselves, within the mid caps, within the small caps, different cryptos will pump at different rates and at different times. So if we look at the large caps, for instance, while Ethereum's pumping, Cardano or the Binance coin may trade sideways for a while before pumping themselves. If we look at the mid caps, Avalanche and Solana absolutely exploded before profits rotated to Algorand, Phantom and Harmony. Right, VeChain might be pumping while Theta's taking a backseat. If we look at the small caps, Shiba Inu might pump before profits rotate to the lesser known meme coins. So knowing how to rotate profits within each of these rectangles here, right, might be just as important as knowing when to rotate profits downstream. Now, hopefully you have a good idea on how to do all of this by the end of this video. Alright, now beyond the crypto money cycle, also make sure to keep your eyes peeled on the total crypto market cap, which gives you a quick snapshot of the health of the crypto space. And keep your eyes on the Bitcoin dominance as well, which tells you the proportion of investor money in Bitcoin relative to the altcoins. For example, if both the crypto market cap and the Bitcoin dominance was going up, then that means the money coming into the crypto space would mostly be going to Bitcoin, right? Now, on the other hand, if the crypto market cap is going up, but the Bitcoin dominance is steadily going down, then the capital that's mostly flowing in is going towards the altcoins, which could mean the momentum is heading towards perhaps an altcoin season. Finally, when the crypto market cap is crashing, it's probably because Bitcoin itself is crashing, which, as we mentioned earlier, it's going to cause the altcoins to crash as well. And then this is where you see a lot of investors sit on the sidelines for a bit while things cool down before bullish momentum eventually returns back to the crypto markets, starting back with Bitcoin. All right, now with macro trends out of the way, let's talk a bit about good times for entry, right? So when are some ideal times to buy a cryptocurrency? Well, number one, when the token has established an accumulation zone, right? So take Shiba Inu, for instance, right? So this is if you're into speculating in meme coins. Well, this band here, that is the best place to buy, right? And they're the best times to buy. Not here, but down here, right? You want to wait for the cryptocurrency to stabilize and cement strong support. Another example, Cardano, right? So this is where after the recent Alonzo hard fork upgrade that launched smart contracts, the ADA valuation versus Ethereum stabilized back into this accumulation band, right? So you don't want to buy here, but you want to enter during this accumulation phase. And in fact, as we'll discuss later in a bit more detail, here and here are ideal entry points. All right, moving on, right? Another great time to enter is right after a substantial market correction, right? So here, after the May 19 massive crash, here, all really good entry spots. Thirdly, you want to buy in when the market is at peak fear. Now this goes hand in hand with large crypto market corrections, right? You want to learn to get excited during dumps because, well, you're getting your favorite projects at discounted prices. Also, for those who do leveraged or margin trading, this is actually the ideal time to borrow money to buy crypto if you're going to borrow money. Instead, we see many retail traders using margin accounts to borrow money at the wrong times, right? So FOMOing into pumps, right, at peak prices at times of peak greed, and resulting in devastating liquidation cascades during corrections, right? All the way down here, and we have here as well. Now I've got a video which I'll link above and below on how to do margin trading the proper way. Honestly, I think it would be best for the markets if the majority of crypto traders didn't margin trade, right? As the combination of high volatility plus emotions is just a horrific recipe for losing all your money. All right, fourth situation on when it's a good time to enter is when the project you're interested in has an important update or an upgrade coming. So if we look at Cardano, well, in March, when founder Charles Hoskinson announced on Twitter the imminent launch date of the Mary hard fork, well, the value of ADA against Ethereum exploded. And similarly, in August, when Hoskinson announced on Twitter the imminent launch date of the Alonzo hard fork, the most important update Cardano's ever had, introducing smart contracts, right, the value of ADA against Ethereum exploded once again. In fact, the price of ADA essentially appreciated more than 100% from around $1.40 to $1.50, all the way above $3. Now, please be aware that with trading news and updates, there is often a buy the rumor, sell the news type of correction, right? Often, not always. So in Cardano's case, buying the testnet, selling the mainnet, this happened for both the Mary hard fork and the Alonzo hard fork. We saw corrections both times, but again, it may not happen. It may not always happen, right? So if you look at the Ethereum and London hard fork upgrade, there wasn't a mainnet correction. So it really depends. And to find out about when launches and important updates are coming to your favorite crypto projects, you can check out Coin Market Calendar, where you can put in the name of the token you're interested in, and it's going to tell you when updates are going to be coming. So there's an important upgrade for Polkadot coming by the end of this year, and Solana actually had an important update yesterday where it was listed on Buy Economy, right, an exchange, and it is often the case that the launch of a token on a large exchange corresponds to a price hike. Now, beyond Coin Market Calendar, Twitter and Reddit are also places to keep track of news. Alright, so when is a good time to take profits? And where should you rotate your profits to? Well, everyone has a different profit-taking strategy. Now, if you're more of an investor, then your scope of reference will be the 4-year cycles, where you want to accumulate as much crypto as you can during the multi-year bear market, hold all the way through the bear market perhaps, and then sell towards the market cycle top, right, near the blow-off top at the end of the market cycle. Now, if you're trading, but you don't know how to read chart patterns, for example, triangles, wedges, pennants, flags, and so forth. Or perhaps you do, but you might find this style of trading too cumbersome, or perhaps you're too impatient to wait for breakouts and so forth. Then you can just dollar cost average your way out of your position as the price of your crypto goes up. Right? So for instance, taking the recent Solana pump as an example, you might want to start dollar cost averaging out of your position as your profits increase, right? Slowly taking bits and more off the plate. Now, in any case, whether you're investing or trading, just remember that it takes a lot more money to move the price of a large cap cryptocurrency than a small cap one, right? A few $1 million of investor capital, enough to explode the price of a micro cap meme coin, would hardly make a dent to the price of Bitcoin, which already has a market cap of $1 trillion. So this is why altcoins tend to pump harder than Bitcoin. So the message I'm trying to get across is you might want to let your quality altcoins ride higher before starting to take profits. Now, once you have taken some profits, so in other words, sold some of your crypto for some stable coins, USDT or USDC, what should you buy next? Right? So in other words, where will you be rotating your crypto profits? Well, firstly, where are we in the crypto money cycle? That's something to think about. Right? So keep your eyes on the crypto market cap, keep your eyes on the Bitcoin dominance to get a gauge on whether the market is leading more towards Bitcoin, right? Or more towards perhaps an altcoin season. You can also check out websites like blockchaincenter.net, right? So here between April and June, it turns out more than 75% of the top 50 cryptocurrencies were performing better than Bitcoin over 3 consecutive months, right? So clearly this is a sign of an altcoin season. Over here, this is telling us that around half of the top 50 coins are performing better than Bitcoin and half worse than Bitcoin. In other words, we're kind of in between at the moment. Not quite a Bitcoin season, not quite an altcoin season just yet either. Now, another technique that could be quite profitable for swing trading is identifying undervalued tokens relative to their peers, right? So for instance, if you're interested in smart contracts protocols like Cardano, Polkadot, Solana, Avalanche, right, and so forth, you want to monitor their performance against the smart contracts leader Ethereum to see which ones are pumping and rotate profits into those that are not pumping. For instance, take a look at the value of Solana and Avalanche against ETH, right? They both appreciated massively, right? So this happened after Solana's incredibly successful Degenerate Apes NFT launch, and for Avalanche after the announcement of their roughly $200 million DeFi initiative, where they're going to be partnering up with the DeFi powerhouses Aave and Curve. So both Sol and AVAX, they were running pretty hot, and a lot of traders rightfully took profits. Now, where did they rotate these profits into? Well, quality tokens that are still in an accumulation zone yet to pump, right? So prime example, Chainlink, which has bottomed out against Ethereum, resting on strong support. So great buying opportunity right here, right? So rotating profits from Solana, from Avalanche, which was running hot, into Chainlink, right? And eventually Link, being the market leader Oracle, great use case, it will pump too, right? And then once it's pumped, rotate profits from Chainlink into other tokens whose prices have stabilized. Basically, you're cycling your capital from hot to cold places, rinse and repeat. All right, some closing remarks. So in summary, keep your eyes on the total crypto market cap, right? It gives you a snapshot of the entire crypto space. Keep your eyes on the Bitcoin dominance as well. It tells you whether momentum is swinging towards Bitcoin or perhaps towards an altcoin season. Understand the crypto money cycle, and importantly, how to ride it. Don't jump into cryptocurrencies that have already pumped a lot in price, right? And don't buy into resistance. These are all statistically lower probability trades. Take profits on the way up, so you have money to buy the dips. Buy crypto that's in an accumulation zone, right? Or perhaps even better, undervalued if you can find them. Now, as tempting as it may be, I'd stay away from margin trading unless you absolutely know what you're doing, and that includes knowing how to work out liquidation prices and setting stop losses. Finally, ask yourself, do you even need to trade? Because statistically, the majority of traders lose money, particularly day traders. But no one who has ever held Bitcoin over a 4-year period has ever lost money, right? So the message is, for many people, dollar cost averaging into good projects over the long run will end up being more profitable, right, than the higher effort approach of trying to trade and time the markets. All right, if you enjoyed this video, I'd really appreciate a like and a subscribe. Right, let me know what your favorite strategies are and whether you agree or disagree with anything I've mentioned in this video. I'd love to hear from you. Until next time, have a good one.